In question 615A, we are required to calculate the taxable income for Me Harry Limited for the year ended 30 June 2014 in order to be able to calculate the current tax liability. One of the items that we need to consider is equipment that is sold at the end of the financial year. If we look at the model solution, we'll see that the equipment that was sold is adjusted by adding back the carrying amount of the equipment according to our accounting records and deducting the carrying amount for tax purposes. The net effect of this is an adjustment of $10,000, which represents the total temporary difference that is reversed in the current year. I'm now going to look at this adjustment for the equipment that was sold from a slightly different perspective to illustrate why the temporary difference of $10,000 is included in this calculation. First of all, let's look at the information that was given regarding to the equipment. The cost of the equipment was given as $66,667. Depreciation rates for accounting purposes is 15%, for tax purposes is 20%. We've owned the asset for 3 years. Therefore, our accumulated depreciation for accounting purposes is calculated as $30,000, and the total depreciation for tax purposes for the 3 years amounts to $40,000. With our cost information and our accumulated depreciation cost, we can calculate the carrying amount according to our accounting records as $36,667, and for tax purposes our tax base is $26,667. The different depreciation rates for accounting and tax purposes results in a difference in the carrying amount for this asset for accounting and tax purposes. And because the accounting carrying amount is more than the tax carrying amount, this equipment would have had a deferred tax liability created at the end of the financial year. And because the carrying amount and the tax base differ at this date of the sale, we'll also have a different loss or gain on the sale for accounting and for tax purposes. In this question, we were given the information regarding the proceeds from the sale being $30,000. So if we use that, looking at the carrying amount of the asset, we can calculate that the asset was sold for accounting purposes at a loss of $6,667. For tax purposes, there was a gain on the sale of $3,333. The taxable temporary difference of $10,000 is included in our taxable income calc by adjusting for the loss on the sale and by incorporating the gain on the sale that we've just calculated. As the difference between the accounting loss and the tax gain is $10,000, the company will pay $3,000 more tax this year as a result of the sale of this equipment. And this $3,000 will be equal to the deferred tax liability that was raised in previous years for this equipment. Before looking at the adjustment to our taxable income calculation using the second approach that we've looked at now, let's briefly look at the journals that will be passed in your accounting records to affect the sale of the asset, so basically to delete the assets from the accounting records. Your entry would be, first of all, to debit your bank with the proceeds received on the sale of the asset. Then we have to eliminate the total accumulated depreciation. We recognize the accounting loss on this transaction, and that will be in the income statement of 6,667, and we credit our equipment with the original cost of the equipment. From this journal, we can see that the accounting loss has reduced our accounting profit. And if we look at the previous, we'll see that we have to adjust the accounting loss and include our taxable gain. So let's look at an extract from the calculation for our taxable income then. If we start with our accounting profit before income tax, in order to adjust for the sale of the equipment, we'll add back the accounting loss and include the taxable gain. And the total effect of that is once again the $10,000, which is the taxable temporary differences relating to our different depreciation rates for accounting purposes and for tax purposes that needs to be reversed in the current year when the asset is sold.